Now moving on to your most requested issues. All right. So again, we ask you which stocks do you like to talk about, and we've gathered the top 10 issues. Of course, in the interest of time, we can't answer everything, but again, we're trying our best. And so let me call back Sir Juanis again. Yeah, and we'll go through the stocks one by one, and we'll be asking them of their views, whether they like it or dislike it by raising their paddles. So that's the usual setup. All right, let's go to the first one. So yeah, okay. So the first one is Metro Bank. Do we like it or dislike it? Okay, both of you like it. So both green, both thumbs up. So Sir Juanis, do you want to start? What are we seeing here?
Well, I do see a nice breakout in the late part of November and follow through in this year. I think we're seeing a price channel. Although it could do with a little bit of a pause or correction, I think we're seeing an uptrend that has already begun. So look for opportunities to buy this and to hold Metrobank.
All right, so short and sweet. April?
Okay, yeah. Well, in general, the banking sector is one of the most liked sector actually among analysts right now, because of course with the rising interest rate environment, they're expected to enjoy higher margins. And aside from that, despite the pandemic, they never really suffered from high NPLs, and they have so much provisions. So that's a positive. For Metro Bank, for example, it has an NPL cover of around 170%. More than enough to pay off all the bad loans if they really turn sour. And aside from that, Metro Bank is the most liquid. Loans to deposit ratio is only 67%. And of course, CASA accounts for around 70% of the portfolio. And aside from that, Metro Bank has been giving good cash dividends the past few years because of its high capital adequacy ratio. And it has the highest capital adequacy ratio among the big three. So most likely it could also give huge cash dividends in 2023. And it has the most attractive valuation, trading at only 0.7 times price to book. So that said, I mean, with the BPI and BDO right now, trading at a higher level of valuation of above 1 times price to book, you could actually see fund managers finally paying attention to Metro Bank and rotating their funds there. Because as I've discussed earlier, right now people are a little bit uncertain about what will happen in the next 6 months. So they might finally start to appreciate Metro Bank and allow this bank to unlock its value. Of course, on the risk side, the higher rates could hurt loan demand and asset quality.
All right, thank you. Let's go to the next one. Okay, PLDT. Do we like it or? Oh, also both green. All right, Sir Juanis.
Well, since it was an unusual event that took place that caused the decline, I think that the recovery that we've seen has been consistent. It also closed the gap that it managed to create damage in the initial. That's also a good technical thing to see. I think all we want to see is for it to be able to recover back to where it had come from originally, and hopefully back to the 1600 area. Maybe there we can do some profit taking, but any pullbacks should be an opportunity to buy this back.
So, Sir Juanis, just a follow-up. So the fact that it seems to me that it's still in a downtrend, at least compared to the other issues, is not that big of an issue to you, because
Yes.
Yeah.
Yes, I know that's quite apparent, but we have to take into account that there was an exaggerated sell-off caused by the situation, which it seems to have already rectified. If it were really in trouble, it would have rallied maybe right to where the gap price was and would have fallen back down already. The mere fact it's managed to be able to hold off shows good resilience.
All right, perfectly explained. Thank you, sir. April?
Yeah. So anyway, similar to what Juanis said, I think the sell-off due to the budget overrun news was a bit overblown. I think because prior to the company disclosing this problem, there were rumors that billions of pesos were stolen. But then when the company came out with a briefing, they just said, well, it's more like they became too cautious. So they ended up buying more than what they needed in terms of capex. So okay, so that's not as bad. It's more like, well, they made an honest mistake, So, and then aside from that, of course, what we kind of realized that during the fourth quarter of the year, after both PLDT and Globe actually had their tower sales completed, or at least the first tranche of it, Globe disclosed a significantly lower capex. And then, of course, PLDT initially did not give any numbers, but then with the budget overruns, they also said that, well, we're also expecting our capex to go down. So initially, our concerns on PLDT and Globe were that, how come, your mobile business is only growing by low single digit, but your capex is so big? Of course, if it's not enough, their free cash flow is not enough to finance it. But of course, after selling the towers, and now announcing a lower capex, we're seeing better free cash flow generation from these two companies, and this would lead to actually higher fair values from a discounted cash flow basis, and stronger ability to pay cash dividends. In fact, the profits, I am expecting them to be adjusted upwards because the company would not have to borrow as much money because the capex is not going to be as big as initially expected. And then as far as PLDT is concerned, well, right now, I think one of the major disappointments last year why the telcos underperformed was because of the maturing of the fiber broadband business. But between the three players, I think PLDT is in the best position to sustain growth, or at least capture market share in the fiber broadband industry, given its leadership position, first mover advantage, the better quality of its fiber internet, and of course the stock is, in our opinion, well, after being sold down, it still has some upside, but of course it rallied a lot. So maybe we could wait a little bit on pullbacks and buy the stock.
All right. So even with the budget overall, we don't expect the dividends to go down for PLDT. Is that
No,
correct?
no.
Okay.
Yeah.
All right. That's good. Next one, please. Jollibee. Okay. So do we like it or not? Oh, still both green. 3 out of 3 so far for both of you. Sir Juanis?
Well, it's in a recovery channel, which although it seems a bit slower now, so I think that the first part of the recovery, because Jollibee rallied early, has been done. So I think we'll probably expect a more gradual advance for Jollibee. So look to be able to buy this on the low sides of the range, but hold on to majority of your positions. Selling could be best done maybe closer to 260, but I'll be holding on to this position.
All right. Thank you. April?
Okay, so among the sectors, consumer sector is also one of the favorite sectors. We've shared this during the mid-year market outlook as well. And because we have falling commodity prices, consumer companies will benefit. And of course, there's this story of the resilient Filipino consumers. And aside from that, of course, the reopening of China will benefit Jollibee, given that China accounts for 7% of their system-wide sales. And of course, the acquisition, CBTL, Smashburger are turning around, and valuations, well, I wouldn't say this is the cheapest stock, but compared to historical, it's still cheap, 29 times PE versus its historical average of 37 times. The only risk is, of course, if local consumer spending disappoints because of the high inflation.
April, what about the recent news that Mr. Tan Caktiong and Tan Mantiong sold a lot of shares? I mean, I think 800,000 for Mr. Tan Mantiong and 600,000 for Mr. Tan Caktiong the last few days. How do you view this?
Well, I don't know, but they have been known to actually be trading their stock. Remember before, they bought when the stock was sold down significantly, then we went up. They just, they've traded their stock before. So I think it could possibly be just a trading maneuver as far as they're concerned. Maybe they have a trading portfolio and a core portfolio, but because in the past they also did this to the stock.
That's true. No, that's true. I mean, to
Yeah.
be fair, even after selling a huge amount, they still have much more left, right?
Yeah, I wouldn't
Alright.
be surprised if, as we said, keep some dry powder. And if this stock gets sold down, I wouldn't be surprised if they would be back there buying again. Because this is not the first time they did it, right? I mean, in past episodes when the stock was sold down, they were the ones buying it. And then when it went up, they sold. So this could just be one of those episodes that they have.
All right. Okay, next stock, SEC. What do we think? Also both green. Wow, mukhang bullish talaga. Everything's bullish. All right, Sir Juanis.
Okay, I'm taking a bit of a risk on this one because I'm really hoping we've just seen a higher low into semi-rara. But the earlier on, I did see a breakdown from a wedge, which is not good. Prices are standing in the midst of moving averages, which I would like to see it better. But it looks like the retest of the low so far has been successful. So maybe just a little bit more confirmation is if prices can go over 35 or 36, and that should be able to set its ground better and cause much more appreciation. But maybe we'll probably see that little by little. It just needs to reinforce this.
Are we being extra wary of the support level at 33.5? I mean,
Yes,
what do we do?
I think we have to
it
be.
breaks?
We have to be, because if that were to break, then I might have to turn this back into a red.
Oh, okay. So as long as it holds on
Yes, as long as
33.5,
it holds.
it's a thumbs up. All right. Okay, thank you, sir. April?
Yeah, okay. So for Semirara, it's benefiting from the elevated coal prices. And if we look at the other part of the business, which is the power generation business, it is one of the key beneficiaries of the tight power supply situation in the country because only 28% of its capacity is contracted. So if the prices in the wholesale electricity spot market goes up, it has a lot of capacity to sell. Okay, and as far as valuations are concerned, it's still trading at 4.9 times PE. Historically, it traded at an average of around 11 times PE, and it has a very high dividend yield. So last year, the dividend yield was more than 10%. If I'm not mistaken, it's 14%. Okay. That said, though, I do understand the concern that Juanes has because, of course, we know in general that commodity prices are going down. And if, coal prices actually go down, then it would hurt Semirara because, a big chunk of the profits are from the coal mining business. And in fact, the profits this year are projected to go down by 31%, notwithstanding the expectations of a tight power supply. This, as our analyst George Ching factored in a 20% drop in coal prices.
I see. All right. Okay, next one. Ayala Land. What is our view? Also both green. Okay. Juanes?
Okay, although the properties have not really been that strong like many of the others which rallied faster, I think the bullishness of Ayala Land should also be done with some temperance. Buying it on pullback should be the way to go, but I think enough reversal conditions have already been proven to us to tell us that the worst is over for Ayala Land and that it should be able to maintain its recovery. maybe just go through one more consolidation before we see something more augmented later on. But I would hold this.
Okay, thank you. Very clear. Yeah, April?
Yeah, okay. So similar to what I was saying earlier, I think valuations will be very important in this market. And when, the banks and the consumers have become expensive, the fund managers are going to look for something that, is a large cap that is still cheap. And because of that, well, they look at the properties because, yeah, I know properties have challenges. That's why they're underperforming. But that said, I don't think it's those challenges are that significant enough for them to warrant super cheap valuations. And of course, when they rotate to properties, they will be buying, the biggest player, the most liquid, and that is Ayala Land. So Ayala Land has the largest portfolio of assets across the country and a diversified source of income. It's both malls, offices, and residential. Okay. And of course, it has a solid track record. And in some ways, profits have been recovering with take-up sales on the residential now back to 77% of pre-COVID levels, and mall sales already back to pre-COVID levels. But of course, I mean, okay, I'd like to share with you what fund managers are worried about. Okay, we know, for example, that on the office side, the vacancy rates are quite high. So fund managers are worried that if the contracts expire, Ayala Land will have to price the rents at a lower level so as not to lose their tenants, or potentially because the vacancy rates are so high, they could also lose tenants. Okay. And on the residential side, because of the elevated interest rate level, they could see some slowdown in property sales. So those are the concerns that fund managers have right now on properties, which is why the property sector is lagging relative to, say, the banks and the consumer sector.
Okay, but you think that, yeah, because even with our investor survey a while ago, if I can recall correctly, our investors, our clients are also most bearish in the property sector. So is this a bit of like a contrarian pick? The reason why we're bullish is that
Yeah.
it's already priced in.
I think it is, and because the valuations are cheaper, which is why, for me, if prices go up such that it hits the target price, I think investors shouldn't think twice about taking profits and locking it in gains, because stocks. For example, the property stocks are not really in favor, but there could come a time where even the banks become so expensive that money will need to flow somewhere. So some of that money might go to the laggard sector, such as properties, which are trading at a very, very, very cheap valuations.
All right. Okay, well said. Okay, next one. So far, everything is both a thumbs up. So let's see if we can continue that. MPI. Okay, green and green again. All right. Okay, Sir Juanis.
Well, it continues to remain on an upward path after breaking out from that very long consolidation. I believe it is the rumors going around of a potential buy-in that's keeping it quite strong. So right now, until I see any major change in its trend swings, I would just maintain positions, address it with a protective stop, and just hang on to see where any of these deals actually come up to try to make money with it.
Okay. So far, I know everything's it's just a rumor that they're gonna be privatized, or they're gonna be somebody's gonna be buying a block, right? But based on you're saying, Sir Juanis, based on the price action, everything is still very healthy. I mean, it seems to be in play, that rumor.
Still to display, because it seems to be still very strong despite some issues already trying to curve and correct. This guy still standing strong.
Okay, so far so good. All right, April.
Okay, so Juan has already said the speculation of privatization and somebody coming in And well, I just like to highlight the reason why that is, because the stock is so cheap right now, trading at 57% discount to its net asset value. So putting it in another way, we know that Metro Pacific owns a lot of companies, but right now, at what it's trading at, it's just valuing, Meralco. In fact, you could buy Metro Pacific, and it's actually cheaper than buying shares in Meralco, because they own 47.5% in Meralco. So what you can do is you get the market capitalization of Meralco, multiply it by 47.5%, and the market cap of Metro Pacific as a whole is even less than that. So it's that cheap. So it really is so cheap, which is why, I mean, there is some reason to believe that, well, maybe these talks of privatization could be true. And aside from that, of course, people have been talking about the reason why they don't like MPI is because of, regulatory uncertainties. It's too risky, etc. But, two developments would help, I guess, ease this regulatory uncertainties or concerns on that. For example, the first one is Maynilad's rate rebasing exercise last year. So at least that's done with. We will be able to forecast the earnings. And then Meralco is set to complete the tariff reset exercise in the first quarter of this year. So that should also address, concerns on regulatory risk.
All right, all right. So maybe before we go to the next one, I'd just like to highlight, although we're saying that the ingredients are there for privatization, whatever, but it's not a guarantee. Okay, so it's not 100% sure. So please, also, there's always risks, right, and uncertainties. All right. Next stock, please. ACEN. Is it a thumbs up or a thumb? Oh, okay. We're seeing the first thumbs down. Okay. Sir Juanis first.
Well, I think ACEN started to be able to pull back also because of the potential removal from an index, and that's a reason that it managed to be able to whip back. But after drawing its uptrend line back, it seemed to have just landed right on where it is, and it's now trading back above the most of the averages except one. And I think if it manages to be able to push over that next one, then it should be able to re-angle itself back into a recovery phase. So I don't see anything wrong with it. I wouldn't say it's an extra aggressive move right now, but I think it could just be a moderate recovery for ACEN.
All right, all right. Thank you, sir. April?
Okay, so for ACEN, I mean, the main reason why we don't like it is because of its expensive valuation. And of course, there's so many options. And as we were saying earlier, we don't like expensive stocks, diba? So that's the main reason why we don't like it. But in terms of the story, it's quite good because the company is on track to grow its attributable capacity from 3,740 megawatts to 5,000 in 2024. And for this year, the earnings are projected to grow by 35%, due to the higher capacity, because of course, ACEN is growing its capacity quite substantially, and it has the ability to sell a big chunk of its capacity to the wholesale electricity spot market, because those are new capacities, and less non-recurring losses. So, fundamentally, the story is not so bad, except it's quite expensive and there are other alternatives.
April, do you want to talk about the what Sir Juanis mentioned, the rumored, deletion from an index for ACEN?
Oh yeah, I think there has been a report, or talks that ACEN would be removed from the MSCI and index together with Meralco, and I don't remember the other one. But anyway, usually, if a stock is removed from a major index like that, usually it's viewed as an opportunity to buy these stocks, because the reason why fund managers are selling them is just because of the removal, but it's not fundamentally driven. That's why after a stock is removed from an index, usually a month, 2 months, 3 months later, it's up quite a bit. So that's where, you know, the alpha comes from.
All right. So just to clarify, no, the three issues are just rumored to be removed in the next MSCI rebalancing. It's not yet announced, so please, it's not yet 100% sure. What is 100% sure though is the next stock, you know, so that we're going to be talking about. So can we go to the next one? So they just announced. So April, I think, briefly mentioned this a while ago. Union Bank and DMC are now officially going to be part of the PSEI index, not the MSCI, but the PSEI, replacing MegaWorld and RLC. So maybe we can talk about that in a while. But for now, you can just share first if you like our DMC or not. Okay, still both green. All right. Okay, Sir Juanis.
Well, I don't see any major change in its trend swing, which is up. And I think the reason for it really was because of the potential add-in to the index. Now we'll see that the news is out, whether we'll see a sell and news kind of situation. However, maybe that it may have a limited corrective aspect, because since it's now included into an index, all funds are going to have to be able to position into this to be able to adjust. So I think that should generate some limited downsides for it. And if it does even correct after a sell and news, I think that should be a potential buying window for traders.
Okay, thank you, sir. April?
Okay, so DMC is similar to Semirara because one of its biggest contributors or subsidiaries is Semirara. And of course, it's up due to speculation that it will be added to the PSEI index, which has now been confirmed that speculation is no longer speculation. So yeah, it will benefit from the favorable outlook of Semirara. And of course, earlier on, we talked about Maynilad, the the regulation that has been passed. So they're able to, so we now know what kind of tariffs they're going to get. So that should improve the outlook of DMCI. Attractively valued, the stock is trading at 4 times PE versus historical average of around 11 times. And this stock also gave attractive cash dividends of almost 10% last year. And most likely, if earnings this year are still good, we'll continue to see huge cash dividends from DMCI. Of course, the risk is after, now that it has been added to the PSEI index, it could be sold off because people were kind of anticipating it already. So if ever, I guess you want to buy this stock, you have to wait for it to go down first after, the completion of the index addition. And similar to Semirara, it would probably move very similar to Semirara. If commodity prices or coal prices go down, the stock would probably also be sold off. And similar to Semirara, profits this year could go down because last year was a high base. If coal prices go down, which George Ching forecasted a 20% decline in his P&L forecast for DMC, that's what he assumed. He's projecting a 36% decline in DMCI's profits this year.
All right. So potential sell on news on the announcement of the inclusion, but at the same time, still very cheap with high dividends. Mm-hmm. All right. Okay. Next one. Second to the last issue, BDO. Do we like this issue? Sir Juan? Okay. Green both. Okay. Sir Juanis?
Well, I think for the short term, BDO probably hit a snag in terms of resistance, but I clearly see a nice upward trending angle there. It's just a matter of buying it at the right time, and I hope it can pull back a little bit more to support to be able to give people who haven't bought it yet an opportunity to get back on this horse. I don't think the story is over here short term. A pullback should be a opportunity for you to pick it up. So hopefully we can see something closer to maybe even 113, maybe hopefully. But that would be nice to be able to pick up and ride the rest of the advance.
Sir Juanis, if I may, between BDO and a while ago, we talked about Metrobank and maybe even BPI, if you could recall the chart. Do you see any significant difference in their price action, or are they roughly just moving in the same magnitude or same
B-
trend?
BDO still seems to be the stronger pick, and it moves faster, it starts quicker, tends to last longer, a more aggressive pattern. So in my line of work, I've focused to be able to buy those first movers, because once they move first, they correct and they will move first again into the next rally. So I would stick with this.
Well said, well said. Thank you, sir. April.
Yeah, okay. So I'll explain to you why the fund managers love BDO because it's the largest bank. Of course, it's the most liquid, and because it's the largest bank, it has a strong deposit franchise, meaning it has a lot of low cost deposits or CASA. And right now, it's really doing very well. It doesn't it's earning very good net interest margins, especially with interest rates going up, because we know that CASA rates have not gone up, right? So they're actually enjoying much higher spreads with the rising interest rates. And BDO has a track record of being able to grow its lending portfolio at a much faster basis compared to the other banks.
Okay, okay. Thank you, April. For the last issue, LTG. Okay, do we like it? Oh, okay, still green. Okay, Sir Juanis.
Well, still very strong. I don't see any reversal signals as of yet, but it is overbought. So that only means that we might have to be able to prepare for some hiccups moving forward from here. But pullbacks towards your 20, 50-day moving averages may be opportunities to get back here. Just be careful. This can run some illiquidity, and it's because of that that it can generate more volatility. So do wait for the pullbacks here. I'd rather not get caught in a overnight correction that could happen very quickly.
All right. Okay, so good, but wait on pullbacks.
Yeah.
April?
Yeah, I think at least in the short term, it looks good because it's a very cheap stock. Okay, for example, the dividend yield was 13% last year, trading at 4 times PE for a consumer company. That's really quite cheap. And our theme this year is really banks and consumers, and LTG is both invested in a bank through PNB, which is 20% of NAV, and consumers through Philip Morris, 65% of NAV, 60% of profits. Okay. The main risk, though, why the long-term outlook might not be as attractive for LTG, of course, is that first, the excess taxes on cigarettes will be increased by another 5 pesos this year, and this could hurt the demand. And we're seeing a trend where sales volume of tobaccos is going down. That's a general trend that's going on. So over the long term, might not be so good, but given the valuations and the theme right now, it looks okay.
All right. Thank you very much, April and Juanis, for your answers, for your views. No? Can we show a summary of their picks? Although it's not too hard to, everything's a green except ACEN. But oh wow, okay, we have it here. So they both agree on all of them except ACEN. And just to share, historically their picks, especially those that they both agreed that it's positive, have generally performed better than the market. But of course, I still want to say it's not a guarantee of future results. So again, there are always risks and uncertainties in the markets that we have. All right.